Department of Commerce with Computer Applications, Dr. SNS College of Arts and Science, Coimbatore. Now we are going to conduct the case study video. The case study topic relating to various companies, how they are using the ratio analysis in their activities, in their financial performance. Today we are going to discuss about Deloitte companies, Wipros and Tata consultancies, how they are implementing ratio analysis, how they are using the formulas for ratio analysis in their real financial activities and financial accounting activities. So how it will be useful for the companies and how they are facing their problems by using the ratio analysis. Now I call upon the student to discuss about the case study of each of the companies.
Leverage, solvency ratio, debt equity ratio very low, Wipro has very little debt. Interest coverage ratio very high, company can easily pay interest on loans. Efficiency ratios, asset turnover ratio, assets are used responsibly well. Fixed asset turnover high, integrations is used efficiently.
So Wipro la என்ன பண்றாங்க, liquidity ratio எப்படி யூஸ் பண்றாங்க. So liquid means easily converted into cash. So every company should maintain the cash position. So எவ்வளவு asset இருந்தாலும் சரி, liability இருந்தாலும் சரி, they have to maintain the cash, liquid cash. எப்பவுமே கையில cash level இருக்கும். அதை maintain பண்றதுக்காக எவ்வளவு அளவு maintain பண்ணணும்ங்கறதுக்காக they will prepare the liquid ratio also. Okay, next step.
Profitability ratio, net profit margin good around 15 to 16%. Wipro earns a healthy profit from its sales. Operating margin strong around 20% plus company control with operating cost. Liquidity ratio, current ratio around 1 or above. Wipro can pay with short-term bills comfortably. Quick ratio, high, strong cash and liquid asset position.
So Wipro la, it is a very famous, familiar, big organization, MNC company. So they have to maintain the liquidity, current ratio and quick ratio. So both are similarly equal, but slight difference in liquidity ratio and current ratio and quick ratio. So current ratio means they have the cash and bank balance. அவங்ககிட்ட பணம் எப்படியும் அவைலபிள் இருக்கும். லிக்விட் அப்படின்னு சொன்னால் ஈஸிலி கன்வெர்டட் இன்டு கேஷ், ஸ்டாக் வச்சுக்கலாம், அதை சேல்ஸ் பண்ணி கேஷாக மாற்றலாம். குயிக் ரேஷியோனா ஈஸியாக எப்படி நம்ம பாரோ பண்ண முடியுமோ அது. ஸோ இந்த மூணையுமே தே ஹாவ் டு மெயின்டைன் இன் எ சிமிலர் லெவல். ஓகே, நெக்ஸ்ட்
Ratio analysis of Google. Liquidity ratio. Google has strong liquidity position. It has enough current assets to pay short-term liabilities easily. This shows good short-term financial safety. இப்போ கூகுளில் வந்துட்டு அவங்க வந்துட்டு ஸ்ட்ராங் லிக்விடிட்டி பொசிஷன் இருக்கிறனால அவங்க வந்து ஷார்ட் டேர்ம் ஃபினான்ஸ் வந்து ஈஸியாக பே பண்ண முடியுமா. இதனால் இப்போது எக்ஸாம்பிள் பார்த்தீங்கன்னா அவங்களுக்கு வந்து அசட்ஸ் வந்துட்டு ஒரு 2 lakh இருந்ததுன்னா லைபிலிட்டி 1 lakhனா அவங்க வந்துட்டு இந்த ஷார்ட் டேர்ம் இது வந்து ஈஸியாக வந்து அவங்க ஃபேஸ் பண்ணுறாங்கன்னு சொல்லியிருக்காங்க. நெக்ஸ்ட் வந்து ப்ராஃபிட்டபிலிட்டி ரேஷியோ. Google earns high profit from advertising, YouTube and cloud service. Google profit and net profit ratio shows strong earning capacity. High profitability shows efficient management. இவங்க வந்து மூணில் மெயினாக வந்துட்டு ஹை ப்ராஃபிட் வந்து ஏர்ன் பண்ணுறாங்க. ஒன்று என்னென்னா அட்வர்டைஸிங், ஒன்று யூடியூப் வந்து க்ளவுட் சர்வீஸ். இதனால இந்த மாதிரி இன்கம் இருக்கிறனால வந்துட்டு அவங்க எஃபிஷியன்ட் ஒரு மேனேஜ்மெண்ட்டு அவங்களால கொடுக்க முடியுதுன்னு சொல்லிட்டு சொல்லுவாங்க.
நெக்ஸ்ட்
Ratio analysis of Infosys. Profitability ratio. Net profit margin shows how much profit Infosys earned from revenue. Operating profit margin indicates strong cost control. Return on equity. High ROA shows efficient use of shareholders' funds. Return on assets reflect effective use of company assets. Liquidity ratio. Current ratio. High, showing Infosys can easily meet short-term liabilities. Quick ratio. Strong due to high cash and low inventory.
Solvency ratio. Debit equity ratio very low, almost zero debit.
Interest coverage ratio very high, no risk in interest payment, capital structure mainly equity, fund and financial stability. Efficiency ratio, asset turnover ratio, good asset resources. Receivable turnover ratio, efficient collection from client, day sales outstanding, modern and well managed.
So in Infosys, it's related to Infosys information. So Infosys also a very big MNC companies. They have to maintain their solvency ratio. How to collect the debtors value, how to pay the creditors values, how to collect the amount from the debtors. That next.
Next, Deloitte company. So ratio analysis in Deloitte refers to the evaluation of company's financial performance and financial position by using different financial ratios calculated from its financial statements. Since Deloitte is a private partnership-based professional service firm, ratio analysis is mainly used internally by management and partners rather than for public investors. So first ratio analysis, profitable ratio, net profit margin shows Deloitte's ability to generate profit from its professional services. And then return on capital employed reflects efficient use of capital in consultancy and advisory services. So liquidity ratio, current ratio, quick ratio and working capital position. And then current ratio measures Deloitte's ability to meet short-term obligations, and quick ratio strong due to minimal inventory and high receivable cash. Working capital position generally stable because of regular service income.
Next, ratio analysis of Tata Motors Limited. Quality position. Tata Motors current ratio shows its ability to pay long-term liabilities. Profitability positions. Net profit ratio indicates overall probability after all expenses. Solvency positions. Debit equity ratio shows its positions of borrowed funds and ownership funds. Tata Motors uses both equity and debt to finance its business. A balance ratio shows the long-term financial stability. Thank you.
So various companies, we discuss about the Deloitte, Infosys, Tata Motors and Wipro. So in the four companies, they have to use the ratio analysis of solvency, debt equity and current ratios, quick ratios and liquidity ratios. All the purpose to maintain the ratio is they have to know the financial performance, financial level, overall financial level of the company. They have, based on the financial level, they have to take the suitable decision for the future activities also. Thank you for